Filipino workers have long been in high demand globally, but in 2025, as some countries tighten restrictions on hiring Filipino workers, over 300,000 Filipino workers are being forced to return home due to stricter immigration policies, economic challenges, and diplomatic tensions. Countries across the Middle East, Western nation, and parts of Asia-Pacific region are reducing their acceptance of Filipino workers, particularly in sectors like healthcare and domestic work. The decline in demand is severely impacting the Philippines. Remittances is crucial for families, and the economy have dwindled, leaving many struggling. Meanwhile, returning workers are flooding the local job market, intensifying competition for limited jobs, and driving up unemployment and underemployment. In this video, we will explore the reasons behind these rejections, their impact on Filipino workers, and their families. Let's start. Number 10. Malaysia. In 2025, Malaysia's implementation of the Malaysian First Employment Policy has led to the abrupt return of many Filipino workers. Under this policy, Malaysia has revoked work permits for foreign workers, including Filipinos, and enforced a strict 30-day notice for them to leave the country. This sudden enforcement has caused significant stress and uncertainty for Filipino workers who have relied on these jobs for financial stability. The revocation of work permits has displaced thousands of Filipino workers, leaving them with little time to find alternative employment or prepare for their return home. Many face financial instability as they lose their source of income and struggle to cover basic expenses. The emotional and mental strain is equally severe as workers face the uncertainty of their futures and the challenge of starting over in the Philippines. The broader implications of this policy go beyond the workers themselves, affecting their families who rely on remittances and Malaysia's labor market, which may experience a shortage of workers in key industries. Filipino workers will now need to seek opportunities elsewhere, contributing to shifting global labor migration patterns. This sudden change calls for both governments to explore solutions to mitigate the impact on displaced workers and their families. Number 9. Taiwan. Taiwan has been a popular destination for Filipino migrant workers, particularly in the manufacturing and healthcare sectors. The relationship between Taiwan and the Philippines in terms of labor exchanges. But in 2025, Taiwan government will be implementing a controversial policy that requires Filipino migrant workers to return to the Philippines. Taiwan has implemented a 60% cut in factory worker quotas, significantly impacting Filipino workers who have long relied on these jobs. Along with the reduction in quotas, Taiwan introduced a stricter skills verification system, making it harder for foreign workers, including Filipinos, to secure and maintain employment. Taiwan's mandatory return policy further compounds the situation, forcing many workers to return home after their contracts expire. The cuts and stricter policies have led to widespread job losses and uncertainty for Filipino workers who have built their lives in Taiwan. Many face financial strain as they lose their income source, putting a significant burden on their families back home who depend on remittances. Long-term plans, such as saving for education or housing, are disrupted as workers now have limited prospects in Taiwan. The broader implications extend beyond the workers themselves, affecting Filipino families and Taiwan's labor market. With a reduction in foreign labor, industries may experience labor shortages, leading to potential challenges in production. Additionally, Filipino workers will be forced to seek employment opportunities elsewhere, creating new migration trends and shifting labor markets globally. Number 8. South Korea. In 2025, South Korea's decision to phase out the E9 visa program has forced many Filipino workers to return home. The E9 visa has been a key pathway for overseas Filipino workers to secure jobs in South Korea's factory and manual labor sectors. However, as automation rises across industries, the demand for foreign labor, including Filipino workers, has sharply decreased. The introduction of stricter language requirements has added further challenges, making it harder for many workers to qualify for available positions. As a result, thousands of Filipino workers are facing job losses and the harsh reality of returning home with uncertain prospects. The phase-out of the E9 visa and the rise of automation mark the end of an era for Filipino workers who have long contributed to South Korea's industrial success. This shift also signals broader implications for both Filipino families who rely on remittances and South Korea's labor market, which may struggle with labor shortages. This transition could push Filipino workers to seek employment in other countries, altering global labor migration patterns. To help workers adapt, both governments may need to collaborate on retraining programs and explore new labor markets. Number 7. Japan. In 2025, Japan's decision to end the caregiving trainee program has forced many Filipino workers to return home, disrupting a crucial lifeline for them. The program, which provided opportunities for Filipinos to work in Japan's caregiving sector, was vital for addressing the country's aging population. However, with its termination, Filipino workers now face limited job prospects in Japan's healthcare industry. Additionally, Japan's new tax system and high cost of living have placed increased financial strain on workers. As the cost of living rises, many Filipino workers struggle to manage their finances, adding to the pressure of an already challenging situation. Japan has also introduced stricter visa policies, reducing quotas for visa extensions and imposing higher standards for visa renewals, making it even harder for Filipino workers to remain in the country. These changes create significant challenges for Filipino workers in Japan, forcing them to return home after years of contributing to Japan's caregiving sector. The broader implications include potential economic strain on Filipino families who rely on remittances, as well as disruptions to Japan's caregiving sector, which may experience labor shortages. This shift also highlights the changing global labor migration patterns, requiring workers to adapt to new opportunities abroad. Number 6. Kuwait. In 2025, the mass deportation of domestic workers in Kuwait has deeply affected the Filipino community. Sudden deportations have disrupted the livelihoods of thousands of Filipino workers, forcing them to leave the country with little time to prepare. Many workers who had been sending remittances back home to support their families are now facing significant financial strain. Kuwait's introduction of age restrictions for workers has excluded older Filipinos from employment opportunities, further complicating their situation. Older workers, who often have limited options, are especially vulnerable to this change. The emotional and financial toll is profound, as many workers struggle with the uncertainty of their futures. Kuwait's zero-tolerance policy on overstays has also placed Filipino workers at risk of severe penalties, adding another layer of stress and anxiety. These stringent rules have forced workers to quickly navigate a complex legal environment, increasing the pressure on them. The broader impact on the Filipino community in Kuwait is substantial. Families back home are facing financial hardship as remittances dry up, and workers now face an uncertain future. This shift highlights the vulnerability of foreign workers and the challenges they face when migration policies abruptly change. Number 5. Hong Kong. In 2025, policy changes in Hong Kong have significantly impacted Filipino domestic helpers, causing widespread displacement and financial insecurity. The reduction in the domestic helper quota has led to fewer job openings, leaving many workers without employment. New minimum income requirements for employers have further reduced opportunities, as many families can no longer afford to hire domestic workers. This has forced numerous Filipino workers, who had long relied on steady income from Hong Kong, to face job losses and financial instability. Additionally, stricter housing regulations have imposed challenges on workers' living conditions. Many domestic helpers now experience more difficult living arrangements, as housing restrictions limit available options and create strain on their daily lives. For long-term workers, these changes are particularly disruptive, displacing individuals who have dedicated years to building a life in Hong Kong. The resulting emotional and mental toll has increased stress levels, as workers grapple with uncertainty about their futures and the financial burden on their families back home. The combined effects of job losses, stricter regulations, and financial insecurity have deeply affected the Filipino community in Hong Kong, highlighting the challenges foreign workers face when abrupt policy changes reshape their opportunities and living conditions. Number 4. Bahrain. In 2025, Bahrain's decision to phase out Filipino workers has created significant challenges for the Filipino community. The non-renewal of employment contracts has resulted in the exclusion of many Filipino workers from the workforce, forcing them to return home and disrupting their long-term plans. Restrictions on property ownership have further hindered workers' ability to establish stability, leaving them with few options for building a future in Bahrain. Family visa cancellations have added to the hardships, leading to the forced separation of families and emotional strain for workers who had previously lived with their loved ones. The mass departure of Filipino workers highlights the broader challenges of migration policies and their impact on migrant communities. These changes undermine the significant economic contributions Filipino workers have made to Bahrain over the years. Many workers are now navigating uncertainty as they return home, facing joblessness and financial instability. Families dependent on remittances are also experiencing economic strain, adding to the broader implications of this policy shift. The phase-out of Filipino workers in Bahrain emphasizes the vulnerability of migrant workers to sudden policy changes, disrupting lives, families, and livelihoods, while underscoring the need for more inclusive and sustainable migration frameworks. Number 3. Saudi Arabia. In 2025, Saudi Arabia's Saudization initiative has significantly impacted Filipino workers, displacing many from key sectors now reserved exclusively for Saudi nationals. This policy has led to widespread non-renewal of employment contracts, particularly in industries such as retail, hospitality, and administrative roles, where Filipino workers have traditionally played a vital role. Domestic workers also face tightened restrictions, further reducing opportunities and disrupting livelihoods. These changes have deeply affected the Filipino community, which relies on steady employment to support families back home through remittances. The loss of jobs has created financial instability and forced many workers to return to the Philippines with uncertain futures. Beyond economic challenges, the new restrictions have also impacted community and religious practices. Limitations on public religious gatherings and community events have weakened support networks that many Filipino workers rely on to navigate life in Saudi Arabia. This has contributed to a growing sense of displacement and isolation among the Filipino population. The Saudization initiative underscores the challenges faced by migrant workers amid changing national employment policies, disrupting not only their livelihoods, but also their sense of community and belonging in Saudi Arabia. Number 2. UAE. In 2025, the UAE's Emiratization policy has introduced significant changes for Filipino workers, as key sectors such as banking, insurance, and government roles are now reserved for Emirati nationals. This shift has drastically reduced opportunities for Filipino professionals who previously thrived in these fields, forcing many to confront job displacement and uncertainty. Adding to these challenges are stricter family visa restrictions, which have separated loved ones and disrupted the lives of many Filipino families. With increased requirements and limited eligibility, workers are finding it harder to maintain their families in the UAE, often resulting in the need to return home. The combined impact of job losses and family separation has taken an emotional and financial toll on Filipino workers. Many had built lives in the UAE, aspiring for long-term stability and a better future for their families. Now, dreams of stability are being replaced by the harsh reality of displacement and economic insecurity. As the Emiratization policy reshapes the UAE's workforce, it underscores the vulnerability of migrant workers to policy changes. The Filipino community, which has long contributed to the UAE's success, faces an uncertain future, highlighting the need for support and adaptation during this transitional period. Number 1. Qatar. In the wake of the 2022 FIFA World Cup, Qatar's workforce reduction policies have created challenges for Filipino workers. With declining demand for labor post-World Cup, many sectors no longer require the same level of foreign manpower. This shift, coupled with Qatar-only employment policies prioritizing local citizens, has significantly reduced opportunities for Filipino workers. A recent ban on hiring new Filipino workers has further restricted pathways for employment, leaving many aspiring overseas Filipino workers, OFWs, without prospects in Qatar. For those currently employed, non-renewal of contracts has forced many to return home, disrupting long-term plans and aspirations. Returning home presents its own set of challenges. Many workers struggle with the lack of local job opportunities in the Philippines, making reintegration into society difficult. The sudden loss of steady income has placed financial strain on families who relied on remittances for daily needs, education, and other expenses. The workforce reduction in Qatar highlights the broader vulnerabilities of migrant workers to changing economic and policy landscapes. For Filipinos, the transition marks an end to significant opportunities that once supported countless families, emphasizing the urgent need for alternative pathways and support systems during this period of uncertainty. This decision comes amidst a mix of economic and political pressures, which has sparked widespread debate. The Taiwanese government argues that this move is necessary due to increasing concerns about job competition, labor market imbalances, and national security. And there you have it, these 10 countries rejecting Filipino workers in 2025. While the numbers may be shocking, it's important to understand the broader impact on Filipino families and the future of overseas employment. Thousands of hardworking Filipinos are facing new challenges, and these decisions are shaping the global workforce in ways we can't ignore. The consequences are far-reaching, not only for those seeking jobs abroad, but for their families back home. If you found this video insightful, don't forget to hit that like button, subscribe, and turn on the notification bell to stay updated on more videos. Share your thoughts in the comments. What do you think about the challenges Filipino workers face in these countries? Thanks for watching.